All right, so today we're going to tear into an analysis of a stock, ticker RZLV, that makes a pretty bold case for what you might call a moonshot. And the whole thing kicks off with one really wild day of trading.
And it all starts with this one absolutely massive number, 36 million. I mean, think about that. 36 million shares of a stock that was, pretty quiet, suddenly trading hands on a single Friday. Now, a surge like that, that's not just static. That's a huge signal, and it's basically the spark that ignites this entire analysis.
And look, the source is really clear on this. This wasn't just a bunch of retail traders getting excited. No way. When you see volume this huge, it's a powerful signal that the bigger players, the institutions, the big money, are stepping into the ring with some serious conviction.
Okay, so Friday was the big explosion. But the big question is, right? Was it just a one-day fluke? A pump and dump? Well, the clue that maybe something bigger was happening actually came before the market even opened on Monday. The stock gapped up in the pre-market. And what that tells you is that traders were so confident they held their positions all through the weekend, basically betting that this ride was far from over.
So that pre-market confidence really points us towards the technicals, the foundation of this whole argument. So let's pull up the charts and see what's actually building the launchpad for this bullish theory.
Okay, so the very first thing that jumps out on the chart is what the source calls a double bottom floor. Think of this as the psychological bedrock for the entire play. You can literally see the stock try to drop into this 222 to 230 range, and then bam, buyers step in, not once, but twice. It's like it's building a perfect solid launch pad.
And just to be clear, a support level is pretty much exactly what it sounds like. It's a floor. It's a price zone where buyers just keep showing up, saying, nope, not going any lower. They support the price. And every time they successfully defend that level, it builds confidence in the market, telling everyone, hey, this foundation is solid.
Right, so having a solid floor is great, but that doesn't mean the rocket is going to launch, right? You need ignition, and that's where the next piece comes in. The source points to a really critical shift in momentum, a MACD buy signal. This is basically the confirmation traders look for that says, okay, this upward trend has some real horsepower behind it.
So, what is the MACD? Well, without getting too bogged down in the math, it's all about momentum. It's watching how two different moving averages of the price are behaving. And when they cross over, in just the right way, a bullish crossover, it's kind of like a car's engine shifting into a higher gear. It's that classic signal traders watch for that says buying pressure is heating up and a real multi-day rally could be on the menu.
Okay, so let's recap. We've got the solid foundation and we've got the ignition signal. So, where's this rocket actually going? This is where things get really interesting. The high-stakes part of this whole breakdown. We need to pinpoint the ultimate target. And let me tell you, we are not talking about a little pop here. The theory calls for a really significant move.
And the source uses a fantastic analogy here. It suggests the price could literally get sucked up to that target level and fast. The idea is simple. Once you break through certain ceilings or resistance levels, there's not much in the way. It's like a vacuum opens up above, just pulling the price higher in a rapid climb.
And that specific target, that powerful magnet we're talking about, is $3.11. Now you might be thinking, why $3.11? That sounds pretty random. But it's not random at all. In fact, it's the exact location of a massively important technical landmark, the 200-day simple moving average.
See, the 200-day SMA is so much more than just a line on a chart. For the big institutional funds, it's a huge psychological line in the sand. I mean, for a lot of these big money managers, if a stock is trading below it, it's basically in bear country, a long-term downtrend. But if a stock can punch above that line, whoa, that sends a massive signal to the entire market that the long-term trend might be turning bullish. And that can attract a whole new flood of buyers.
All right, so we get the theory, right? We've got the launch pad, we've got the ignition, and we've got that big magnet of a price target. That's all great. But a theory is pretty useless without a concrete plan. So now, let's get practical. Let's look at the actual flight plan, the key price levels you need to watch.
And this table here lays out the whole roadmap perfectly. At the very top, you've got the blue sky target, that 311 magnet. The trigger to get things moving is a break above Friday's high at 265. Below that, you've got your critical support, the must-hold zone between 245 and 250. And at the very bottom, the hard floor at 230. If it breaks that, it's game over for this particular idea. That's the line in the sand.
Of course, we all know the market almost never just goes straight up. Things can get choppy. So what's great about this analysis is that it doesn't just give you one plan.
It gives you two distinct strategies, getting you ready for two totally different scenarios right at the opening bell. One for if the stock just keeps running, and another one for if it decides to pull back first.
And here you can see them side by side. You've got strategy A, the moonshot play. The mindset there is all about capitalizing on that immediate, powerful momentum. And then you have strategy B, the dip buy, which has a totally different mindset. It sees a price drop not as a bad thing, but as a potential discount, an opportunity to buy in cheaper.
So let's dig into that Green Day moonshot plan. Step 1, you don't just jump in at the bell. You wait for the first 10 minutes to see if the price can hold strong above 260. You're confirming that the buyers are really in control. Step 2, if they are, you enter the trade on a confirmed breakout past that 265 trigger. From there, your first little target is a checkpoint at 285. But if the momentum is still strong, you shift your focus to the main event, that $3 to $3.11 magnet zone.
What's cool is the source even breaks down two different ways to enter this breakout depending on your risk tolerance. The aggressive trader, they're buying the second it ticks over 265. The risk, of course, is a fake out, a quick spike and drop. The more conservative trader, on the other hand, waits for a full 5-minute candle to close above 265. You get way more confirmation that way, but you might end up with a slightly higher entry price. It's a classic trade-off.
But what happens if it doesn't just blast off? What if it opens, looks strong for a minute, and then starts to pull back? Well, that's where strategy B comes in, the red day dip buy. And the key here is all about mindset. You don't panic. You see this pullback as a potential sale, a chance to get in at a discount by using those support levels we talked about before.
Now, the number one tool for this strategy is something called VWAP. That stands for Volume Weighted Average Price. And all you really need to know is that unlike a simple average, it takes volume into account. So it shows you the price where the most trading actually happened. It's like a center of gravity for the day's trading, and in a pullback, the stock price will often drift back toward it, making it a fantastic spot to look for a bounce.
So the dip buy plan is actually pretty simple. You're watching for an entry in that sweet spot, that prime VWAP support zone between 245 and 250. If it breaks decisively below 240, that's your early warning to step aside. But if it finds support in that zone, bounces, and manages to reclaim the 260 level, well then the whole Green Day moonshot plan is right back on the table.
And there you have it. That's the whole anatomy of this potential moonshot. We've gone from the initial massive volume surge all the way to that ultimate price magnet. You've got two completely different flight plans prepared, one for a green day and one for a red day. The entire technical case is laid out, so really, the only question left is which path the market is going to choose.